Short week with Thanksgiving days. Hello and welcome to our weekly outlook. In a short week ahead, we will have more volatile and risky days with the lack of liquidity, FOMC meeting minutes and bond yield changes, while still we have another round of speeches and many other economic data, including PMI and retail sales numbers from the most developed economies and Chinese central bank's interest rate decision. Let's check the most important events of the week ahead, reminding that the Thursday and Friday are the Thanksgiving holidays in the United States. Number 1. PBOC interest rate decision. The People's Bank of China increased the short-term liquidity by cutting the reserve requirement ratio but not changing in the interest rate to hold the loan prime rate steady, which means that the Central Bank of China still trying to continue its support with dovish policies, especially now that the property sector is in a higher risky situation. In this meeting, investors expecting PBOC to keep its benchmark lending rate steady at the current 3.85% level. This policy will put more pressure on Chinese yuan. Number 2. US existing and new home sales. The housing market is still one of the most active markets with increasing existing and new home sales in September with 7 and 14% respectively. For October, the recently increased mortgage rates, increasing energy prices, ongoing supply logjam, and labor market shortage can be the reasons to expect some weakness in the numbers, which is the market's expectations as well for both new and existing home sales. While we are waiting to see some weakness in the stock markets, these numbers also can increase these expectations and pressure on the stock markets. Number 3. Eurozone PMI number. Tuesday will be public holiday in China, but Eurozone and United States will focus on purchasing manager index data. With the latest COVID-19 waves in Europe and wars in the United States, again, we are not that much optimistic for PMI numbers, especially for consumer and service sector. If we see the weaker numbers, it will prompt the European Central Bank to hold its current ultra-dovish policies and not to start tapering in its overall bond purchases plan at its December monetary policy meeting. This weakness is supposed to hold the pressure on euro against its crosses. Number 4. RBNZ monetary policy meeting. The Reserve Bank of New Zealand announces its monetary policy decision on Wednesday. At the current developing economic conditions in New Zealand, we are waiting to see 25 basic point rates hikes to 0.75% as country's inflation raised by 4.9% in the third quarter. However, same as the September meeting, we may have last-minute changes decision because of some cautionary notes regarding the near-term economic outlook and job reports that showed a large drop in hours worked during the third quarter. Expected policy can put the kiwi in a stronger position against its crosses. And finally, number 5, Thanksgiving Day holidays. Thursday and Friday will be holiday in the United States because of the Christian Thanksgiving days. So, it will be short week while many investors and traders also will be out of the market on the first days of the week because they prefer to rest and enjoy their long holidays out of market stress. So, with fewer traders, we will have lack of liquidity and usually it is increasing the market risk and sharp movements. Therefore, please be careful about your trades and positions. Thanks for being with us and hope it will be an amazing week for you.